What's going on, everybody on YouTube? Griffin here from Millennial Motivation Entrepreneur, coming back to you all with another informative video. Today, obviously, we're going to be talking about inverse ETFs, but first and foremost, if you're just new to me and considering just changing your financial situation, maybe you're just wanting to work from home and learn how to do so with day trading and just different types of ways of making money from home, or you're just looking to get out of debt, how to go about doing stuff like that. We talk about all sorts of stuff like that, just overall finance, how to win with money essentially on this channel. So if you're new to me, like I said, and if you find this video informative, definitely consider hitting that subscribe button below. Let's go ahead and get right to it, everyone. What are inverse ETFs exactly? So inverse ETFs are pretty much just like it sounds, inverse. As one goes up, the other goes down. So right now we're going to be talking about just like ones that I keep an eye on a lot, even though I'm not currently investing them. I did invest in JNUG for a minute, and I made about a 6% profit. I didn't sell a whole bunch of them or anything because, as most of you know that know me, I'm not starting out with a huge amount of money, but my plan is to just keep growing and compounding my account over time, and hopefully one day in the next year is my goal, make this my full-time job. But anyways, like I said, inverse ETFs are just pretty much as one goes up, the other one generally goes down. That does not mean you should avoid the other one. People often day trade the negative ETF all the time because it'll see a dip early market hours to like say -6%, and then it bounces up to like just -2. So right there you get a 4% profit. But that's a whole nother video. Point being, JNUG, as you can see right here, is currently, I'll go ahead and just go back, say 10 days. It's just kind of really started going up here lately. If we go back even further, let's just go 20 day even. As you can see here, it started going down and now seems to be slowly trying to go right back up to around the $16 mark. Now let's go ahead and look at the same day amount, 20 days, and let's go ahead and just hop over to JDST. And if you guys are wondering what platform I'm using the Thinkorswim real-time data, of course, platform by TD Ameritrade. If you don't know how to get the real-time data, I literally just uploaded a new video either today or yesterday about like how to go about doing that. So go ahead and consider staying tuned for the end of this video so you'll be able to see that video. I'll put like a card for it at the end. But anyways, as you can see, obviously JDST was up, and lately it's been trending. It started going back up and then trending down. Let's go ahead and do 180 days so you can really see what I'm talking about here. So as you can see, up, down, up, down. Now let's go ahead and look at JNUG. So as you can see, down, up, down, up, down, and it looks like it's trying to go back up. And these, I believe, if I remember right, they're like gas, like natural gas or something. Or no, these are gold miners, okay? The gold miner ones, they kind of fluctuate. I don't really know too much about like gold in general. I'm not going to pretend that I do or anything. But I was going to get off on a tangent about like natural gas and stuff, but wrong ones really. Apparently, I think that's degas is what I'm thinking of. Yeah, I'll go ahead and show you guys that in a minute. But pretty much point being, like I said, when they're just going up, one's going up, one's usually generally going down. Doesn't mean you should avoid the one that's going down. No, not exactly, not whatsoever. Actually, when that's going down, obviously you want to identify the lowest point possible, like the new support, so to speak. So let's go ahead and just look at 20 days. So obviously you'd see the low point is at 1134, but you'd say the general support is what, roughly around probably 1260, somewhere around there. The lowest support, obviously. So if you're like a long-term investor, and you would think, because this is pretty long-term at this point, 20 days is pretty long-term, you would identify support roughly around like 1260 to 13. You'd want to get in around there, of course, and then ride it up to say the $16 limit or 15, somewhere around there. Let's just say right here at 14. You would want to write it there. I personally would not. It's just not my investing style. My investing style is day or swing trades. But if you're a long-term investor, you might want to do that. Just catch it on the way down, obviously. Buy low, sell high. That's your goal at the end of the day. Me personally, I'm just not that patient of a guy. Like I said, I plan on making this my full-time career. So I need to be doing trades on the daily. I need to be looking for 3 to 5% minimum per day. So that's just me at the end of the day. Let's go ahead and look at another one. I'll just show you guys another couple. Gush and Drip are two other ones. So as you can see, Gush, I've been into Gush a little bit lately. But as you can see here, Gush goes down, up, down, a little bit up. But Gush has been kind of trending up, but it had a huge sell-off. I don't know when that happened exactly. That was before I was trading. Yeah, it was around the new year, so to speak. but it had a huge sell-off, so it went down. Now let's go ahead and look at DRIP. So DRIP, if you're trying to follow me. DRIP, obviously, inverse, doing the opposite. It, instead of having a huge sell-off, has been going up. So if you got in, say you're a long-term investor, and you got in this low period around $9 to $10, and then you could have sold off roughly around 15, you're talking huge profits at that point, guys. I mean, you're talking a $5 profit on a $10 investment. I mean, that is really good. And then you start multiplying that by, let's say you bought 100 shares at $10. That's only $1,000 investment. So you turn $1,000 into $1,500 at that point. So I mean, the long-term investing, I'm not saying don't long-term invest. I'm just saying it's not my type. I don't want to hold a share of a stock usually more than like a week or two, but that's just me personally. Obviously, if like your job depends on you to like not really be on your phone or anything at all, then obviously day trading is probably not for you. Luckily for me, I can do a lot of this stuff at work for the most part. Are there times that I've missed out on some profits because of doing stuff at work? Yes, but usually it's not like a huge ordeal for me. But I'll go ahead and show you guys, what else did I want to show you? Did I say DGAS? DGAS and UGAS. So DGAS and UGAS are other ones. They're natural gas companies. As you can see, in the winter time, obviously, is like the best time for them. They will definitely start. I'm waiting for them to really start trending down come summertime. Spring and summer is right around the corner. They'll really start trending down if we'll go to like the last year. As you can see, it'll trend down. This is DGAS. It went as high as $42. So if you're a really long-term investor, try to get in roughly around, like I said, May, like spring, late spring, early summer. Get in around May, April, May, and then wait until winter. Looky there, you can turn $17 into $42. I mean, I'm not going to say that you're going to literally hit 42. Let's go back 3 years and see where it was at. So it did hit 161. This was a while back. I remember this because natural gas prices spiked that year, I remember. But point being, everything changes year to year, so you can't ever, that's just what I don't really like about long-term investing. But that's just my investing style. Like I said, I'm not telling you guys how to invest whatsoever. But look at here, last year, if you would have bought in at $17 and sold it off even, let's just say you did it at $32. You turned $17 into $32. You almost doubled your money. So imagine investing, say, just again $1,000 into DGAS and then flipping it at 32. You pretty much turned $1,000 into what, roughly at least 1,800. So I mean, huge profit margin, guys, for small term, long term, any type of investor. But now let's go ahead from DGAS and go over to UGAS. So see, UGAS trending down. The last year, it hit a low of 49, but let's say you got in around 49. Low was 49, so let's say you got in at 50. You got in around 50, and then you sold it here roughly around 94. Looky there, you almost doubled your money again. So I mean, let's just go back even the last, let's go recently, 10 days. So as you can see, let me go ahead and take my VWAP off because I can make stuff kind of crazy. Apply, there we go, get rid of all them nasty lines. UGAS, going up recently the last 10 days. And now let's go back to DGAS. DGAS, trending down. So I mean, like I said, it's pretty simple concept. I don't want to make this video too long. I just wanted to show you guys just a few examples. That way it's like as less confusing as possible. DGAS and UGAS are like the easiest ones to tell because as you can see, obviously it's trending down. And like I said, does that mean you should not actively trade it? No, look at that. If you were investing in this dip at 29.32, roughly around there as a support, and got and sold it around 30.66, obviously it's not a huge profit, but you're talking $1, let's just say $1 profit on a $29 investment essentially. Let's say 1 divided by 29. You're talking 3.5% profit roughly. Not huge profits, but you start compounding your money 3% a day over time, you're going to see huge profits, huge difference in your account in 3 months, 6 months, a year. You're going to see such a huge difference, guys. So like I said, I'm going to go ahead and wrap this video up. Hopefully you guys did find some valuable information from this video. If you did and you liked this video, definitely say, hey, giving it a thumbs up. I greatly appreciate it. And like I said, I'll go ahead and put that video somewhere down here. Obviously, you see me in a corner, but I'll put it in one of these corners of this video. And like I said, if you're new to me and like this, definitely consider subscribing either below or I'll put it in one of these corners as well. But until next time, guys, keep on going out there making profits this year, and let's keep on making money and achieve some financial freedom this year.